Welcome back. Let's break down the global news that could hit the market next week and exactly which sectors are in the crosshairs. Welcome back, everyone. Let's dive into the headlines making waves in the stock market this week. First up, ADMA Biologics is urging investors to secure legal counsel due to an important deadline in a securities class action. This could bring volatility for ADMA as investors react to potential outcomes. On a different note, CoreWeave has seen its stock plunge this week. While the reasons aren't confirmed, such drops often indicate underlying issues or market corrections that could affect investor sentiment. Meanwhile, Dutch Bros is shining bright, hitting a 52-week high. Analysts suggest it's still a great buy, pointing to strong sales trends and brand expansion. This kind of momentum can be infectious in the market, driving more interest and potentially more investment. Lastly, we have Amazon down 13% in the last month, raising questions about whether it's a buying opportunity or if there's more trouble ahead. This kind of mixed bag in headlines shows how diverse the market is right now, impacting various sectors differently. Keep your eyes peeled on these stories as they unfold, as they could influence stock performances in the coming weeks. Now, let's take a look at where the money is flowing in the market. The technology sector has taken a hit this week, down 2.71%. This decline suggests that investors might be exercising caution, especially with tech stocks at or near their all-time highs. Such pullbacks can be normal, but they also signal a need for scrutiny in tech investments. On a brighter note, the healthcare sector is on the rise, up 2.63%. This uptick could indicate strong investor confidence in healthcare solutions and innovations, especially in light of ongoing global health concerns. The financial sector is also performing well, up 1.53%, suggesting that investors are feeling optimistic about economic recovery. Meanwhile, the energy sector is holding steady, with a slight gain of 0.78%, reflecting ongoing demand amid fluctuating global oil prices. Keeping an eye on these sector movements is crucial, as they often signal broader market trends. For instance, the stability in healthcare and financials could attract more investment, while continued weakness in technology might prompt investors to reassess their portfolios. Let's check in on global markets to see how they're trading this week. The UK FTSE is up 0.25%, indicating a bit of resilience amid global uncertainties. This slight gain may reflect investor confidence in the UK economy's recovery. Over in Germany, the DAX has gained 0.78%. This uptick suggests that investors are optimistic about the economic outlook in the Eurozone, possibly buoyed by solid corporate earnings or economic data. Turning our attention to Asia, Japan's Nikkei is up 1.47%, while Hong Kong's HSI has gained 1.28%. Both these indices reflecting positive sentiment among investors, showcasing a potential rebound in Asian markets. With these gains across the globe, it's clear that investors are looking for signs of stability and growth. This international context is essential, as it can influence domestic markets as well. Increased global confidence often leads to stronger performance in U.S. equities, so keep an eye on these overseas movements, as they might set the tone for upcoming trading sessions here at home. Next, let's discuss which sectors might be at risk given the current headlines and market conditions. The technology sector is clearly one to watch, especially after its recent 2.71% decline. With numerous tech stocks hitting their all-time highs, any negative news could lead to further sell-offs. This is particularly pertinent for semiconductor stocks, which are down 4.54% this week. If the trend continues, we could see these stocks facing additional pressure as investors reassess their growth potential. Furthermore, the consumer sector is down 0.82%, indicating potential vulnerability as economic shifts might affect consumer spending. With rising inflation and interest rates, consumers may begin to tighten their belts, impacting companies reliant on discretionary spending. So, while some sectors are thriving, others face significant headwinds. As always, it's crucial for investors to be aware of these dynamics, as they can lead to both risks and opportunities in the market. Finally, let's wrap up with the bottom line. The primary macro theme to keep an eye on is the volatility in the tech sector. With several tech stocks nearing their all-time highs and recent declines, how investors react could set the tone for the overall market. The biggest risk as we head into next week is the potential for an economic slowdown, which could severely impact consumer spending and consequently the consumer sector. As we wait for earnings reports from various companies next week, particularly in technology and consumer sectors, these results will be pivotal in shaping market sentiment. Investors should remain vigilant, ready to adapt their strategies based on these developments. Remember, while the market is full of opportunities, it also requires a keen awareness of the risks involved. So stay informed and engaged as we navigate these exciting times in the market. If this helped, smash that like button and subscribe so you never miss a breakdown. Drop your thoughts in the comments. What are you watching, and what should I cover next? This is for education purposes only, not financial advice. Trade safe. And if this video helped you in any way, please hit the like button and subscribe to the channel. It really motivates us to keep making these for you. And join my free Telegram channel for daily alerts with exact entry and exit prices. The link is in the description.